but the S&P and NASDAQ proved me wrong by eking out a little bit of the gain. We'll call it all flat on the markets and call it even. It's Tuesday, August the 29th. Tonight, ministers descend on Washington as Canada tries to get in on that NAFTA action. Donald Trump promises action after accusing Google of left-wing bias, and Britain's Prime Minister starts an African tour. She looks for new markets after Brexit. I'm Paula Newton, and this is Questions Business. Good evening. Right now, Canada is trying to get in on some of that NAFTA action, if it's even called NAFTA anymore. Now, that's the deal which already has been agreed to between the U.S. and Mexico. The Trump administration is piling on the pressure on its northern neighbor now. Canada's Justin Trudeau remains confident, though, that he can get the deal done.
We have been encouraged by the progress made by our NAFTA partners over the past weeks. This was an important step to moving forward on renegotiating and improving NAFTA. As you know, I spoke with both the Mexican president and the American president over the past couple of days, and our team is right now in Washington digging into the progress made and looking at what the next steps are. We will engage in a positive and constructive way, as we always have been, and look forward to ultimately signing a deal as long as it is good for Canada and good for middle-class Canadians.
Now, Canadians tell me where they didn't think a deal was possible in the spring, they do feel that the Trump administration does want a deal now. But there, of course, is no guarantee that Canada wants that deal. Mr. Trudeau said he would defend the country's dairy sector, a key sticking point here, which has been targeted by Donald Trump in the past. And you heard him say that he would only sign up to a new trade deal if it was, quote, good for Canadians. Now, the U.S. Treasury Secretary says Washington isn't worried about doing one deal or two.
The president's objective is to have deals with Mexico and have a deal with Canada. And if we could do it as one deal, we'll do it as one deal. If we do it in two deals, we'll do it in two deals.
Mexico and Canada have been adamant in saying they want this to remain a tripartite deal, a trilateral deal. How does the president feel about that? Is he willing to make sure that that takes place?
I think the president's been adamant that we want deals. That's what we're focused on, good deals.
Good deals. Carla Hills is a former U.S. trade representative. She was in that position years ago, working on that original NAFTA deal. She joins me from Washington. It seems that the president wants to kill all your hard work, but some skeptics have said, look, this is not a complete redo of NAFTA, no matter how you rebrand it, that these steps are incremental. What trade policy? Representative Hills, can you hear me?
No, I didn't hear that.
Oh, no problem at all. We will pick up where we left off. Do you think this is a new rebranding of NAFTA, or do you think materially so far it looks like a big change?
What I hope it is, when it is finished, is an upgrade. The NAFTA is 25 years old, and it needs to be modernized. So many things have happened technologically, economically, since it was initially negotiated. So I applaud the fact that we are adding rules to cover the new technologies, intellectual property protections of those technologies, and so many other things. So it should be a win-win-win situation, so all three nations can continue to be the most competitive region in the world.
But perhaps is it just a win-win? Is it still a good deal if Canada's not included?
Canada is our largest export destination. We are a major partner with Canada. The three of us together make up a market of $19 trillion and 490 million consumers, and we benefit from the synchronized supply chains that run across our borders. We would be a lose-lose-lose situation if we were to break up the synchronization that has been so effective for our economies.
And yet both Mexico and the United States have said, look, if it doesn't work out, it doesn't work out. You know, even is this even possible as you understand it? Because we've even had Democrats like Chuck Schumer saying that, look, when it comes to things like trying to get these deals through the Senate, it's just not going to happen unless Canada is on board. What kind of leverage does that give Canada going into these negotiations, if any?
Well, we want to keep Canada in the negotiations. And of course, we have Trade Promotion Authority, which gives the president the authority to negotiate. He has to say what he's going to negotiate, and he said it was going to be a trilateral. And he has to follow the timelines and consult with Congress. So it is far preferable that we proceed along the legal lines and not create a legal dispute.
In terms of the negotiating tactics here, you know, I've seen this change quite a bit over the last several months as we've been following it. I mean, I don't think the analogy is too strong to say that Canada has a bit of a gun to its head right now. Does this vindicate the negotiating tactics of Mr. Trump? Because, as you know, Canada is already going to move in areas that they would have never moved before.
Well, you know, in my own view, to negotiate a trade agreement is both economics. You have to understand the economics of what needs to be done. You also have to understand the politics. And you don't want to lose good economic opportunity because you've messed up on the politics. So let's hope we can get a win-win-win situation and continue to build on the magnificent partnership that we have built with our northern and southern neighbors.
And in terms of the details that you've already seen on the U.S.-Mexico deal, how much do you think that will advance the Trump administration's goal, really, is to bring those key manufacturing jobs back to the United States and, crucially, back to some swing states?
Well, the rules of origin are aimed to do that in the auto sector. And I think that those can be assimilated. It creates complexity, but it will have some positive effects. So let's see if we're able to work with it. So far, the business groups have generally applauded, but they won't applaud, in my view, if you tear the agreement apart and it's just a bilateral agreement. I think you'll lose that support that you need politically. And as I mentioned, trade agreements are not only economic, but also political in their ramifications.
Yeah, and you make such a good point, because we know that calculus is being done every day in both the Oval Office and on Capitol Hill. Carla Hills, thanks so much. Really appreciate it.
It's always a pleasure to be with you.
Now, it was a muted day on the Dow, as earlier gains were, in fact, wiped out. They weren't stellar gains either. The Dow ended up about 14 points higher. On Quest Express, the mood of the stock exchange was that little bit of restraint is really not a bad thing. Take a listen.
We've had a huge rally, up 300 yesterday. We broke through all kinds of levels. We are trading in record territory. After a while, the narrative about hitting new records, and then the minute we're not hitting a new record on a daily, we start to wonder what's going on. That's pause and consolidation.
Pause and consolidate. I can't believe that I have to do all of this work for just these little itty-bitty records. Now, the Dow, as we were saying, closed flat. We saw, though, new record finishes. Yes, we did, on both the S&P, not by much, and, of course, the NASDAQ, which had been showing some healthier gains earlier in the day, but not so much right now. Now, there are some more signs. The U.S. economy is heating up. U.S. consumer confidence is at its highest point since the year 2000. Now, consumer spending makes up nearly 3/4 of economic activity. At the same time, though, house prices, and this is key, rose in the U.S. by more than 6% in June. This is twice as fast as wage growth. And in the U.S., the trade deficit in goods is getting larger. No surprise there. Analysts put this down to a firmer dollar and uncertainty over those trade tariffs. Mohammed El-Erian is the Chief Economic Advisor at Allianz. Thanks so much for joining me today. We've got a lot to get through, especially when you take a look at this market. Is it sustainable? And let's talk first about the economy itself. That 4% number, we've seen it. We get a revision on GDP tomorrow. Do you think this is a breakout point? Never mind the markets. Is it a breakout point for the U.S. economy?
So it's a breakout point in the sense that we're getting away from the 1.5% to 2% and more to 2.5% to 3%. It's also a breakaway in terms of the U.S. growth potential is improving. Is it a 4% economy? No, but it's a better economy than it's been in the past.
When people look at this market, they are thinking, how high can it go? How will it go? And when do the fundamentals fall apart? And For people like me who are looking for inflation, will I see it soon? Or Jay Powell says, doesn't seem to be any sign of it so far.
Yeah, inflation will go up slowly. I don't think it's your main worry. The main issue about this market, and you've seen it, is that it's in a transition. Last year, it was a more dangerous market. Even though it was a less volatile market, it was more dangerous. Why? Because it was being fueled by artificial monetary stimulus. What we are in the midst of is a handoff from monetary stimulus to more genuine growth-creating policies. And that is a very tricky transition. That's why the market has been more volatile this year. That's why this year is about a U.S. story. It's not a global story. Other markets aren't doing as well as the U.S. So it's a different market.
You don't think the synchronized economies all around the world is going to happen? It's not synchronized growth, is
No, I think that is something that we foolishly fell in love with because
it sounded great.
It sounded great, but what people didn't realize is that the economies were expanding for different reasons. And 3 of the 4 reasons were temporary in nature. So no, the U.S. right now is on solid footing. I would worry more about the sustainability of China and Europe than I would about the U.S.
In terms of monetary and fiscal policy, we'll go to monetary first. I mean, the market loves Jay Powell, and that makes me nervous. Why does it make me nervous? You tell me not to be nervous?
I think it makes you nervous because we were all worried that exiting unconventional policies, 0 interest rates, pumping in liquidity.
The quantitative easing.
Yeah, all that would be really tricky. We didn't have a game plan for it. We had nothing to guide us. And it turns out that the Fed is doing it and doing it well. But be careful. It's one thing when the Federal Reserve does it. It's a completely different thing when 3 central banks do it. And it's only a matter of time when the Fed, the ECB, and the Bank of Japan are all going to be getting out of the business of unconventional policies.
And is that the roadblock that you're seeing up ahead? Is that the speed bump?
It's one of the 4 uncertainties. I put it as the second uncertainty. My most worrisome uncertainty is global growth as a whole. In particular, do other countries transition to a higher growth path? I would put monetary policy second. I would put trade third, and I would put Turkey and emerging markets fourth. So if you're looking for a listing of potential risks, that is the order in which I would have them.
We were just having the discussion on trade. What worries you the most on trade? Let's say even in a perfect world, if they do get a trilateral deal, we've still got Europe, we still have China, we even still have Japan.
Yeah, the big elephant in the room is China, right? And the good news is that this approach that has put on its head process, protocol, everything you can think of has been turned upside down in this whole negotiation. The good news is there's a sequence now. Mexico first, Canada second, European Union third, and that allows for a unified approach vis-a-vis China, which is the toughest nut to crack. So the good news is that you could see now a path forward when many people worried about that there wasn't one.
I have to go, but I can't leave without asking you, is this a vindication of tax reform in the United States and Donald Trump's tax policies?
It's a vindication of tax reform, it's a vindication of deregulation, and it's a vindication of the hope that we'll also get infrastructure.
Okay, Mohamed El-Erian, thanks for coming. I know that Richard will miss you being here. I'm going to say to Richard right now, wherever you are, Mohamed likes me better, which is why he's here when I'm here. Now, President Trump is saying Google